FOMC preparation. Hi, it's Charlie giving you Wednesday's video. So I'm actually recording this in advance of FOMC just to give some overall preparation ideas going into tonight's news. So I'm going to be looking at the S&P 500 here. Now, coming into FOMC to start off with, just yesterday we saw those mid-tier, those regional banks getting hammered again. If I just bring up one of those, Pacific West, you can see what happened to Pacific West yesterday as nervousness started to appear in the markets ahead of FOMC and these higher interest rates, which are acting as a burden as these high yields have transferred into some of their loan book, and of course that loan book includes things like commercial real estate, and that's taken a tumble. So there's risk there in these regional banks. In fact, if I take us to the regional banking ETF here, the KRE is the ticker symbol, then we can see it fell 6% there yesterday. Okay, so there's been a little bit of nervousness coming into FOMC because if interest rates carry on going higher, that can act as much more of a squeeze on those regional banks, and so hence why they've been getting hammered a little bit. So the Federal Reserve and Jay Powell have got a fine tightrope to walk down at the moment. So the market pricing is still heavily skewed towards there being a 25 basis point hike this evening. So we'll go with that. It's something like 90% odds that there is a 25 basis point hike. So we'll go with that. So really it's about the language. So it's not about as much about the announcement itself at 7 p.m. UK time. It's about that press conference that comes half an hour later, and how the language comes across to traders around the world. So if we're assuming it's going to be what we call a dovish hike, and so as long as that message gets across in the right way, the markets might settle. However, if they don't get that fine balancing act, then we could see the stock markets do the opposite. So let's go and actually have a look now at the technicals. So first and foremost, if I just scroll out a little bit here on the daily chart of the S&P and just get my pen up, we can see that there's this whole zone just below 4,200 on the futures here. There's this whole price zone below, just under that 4,200 area, which the S&P keeps on coming back to test. So that's the first, and we're literally we came up to it again just the end of last week, sold off Monday, and then obviously more heavily yesterday. Although as you can see, the S&P didn't hold on to all of those losses, and it did bounce a little bit in the end there yesterday. So that's the first thing to notice there. We do have a trend line coming up through these lows as well, which I'm sure many of you have. Okay, so we've got a couple of levels. So we've got this level just literally, where price has been, and we can see going all the way back is where price has been, and we've got a trend line down below. So the playbook is actually fairly straightforward. If the stock market can get back through that whole zone there, whatever level you want to call it, I've had it at 41.40, but now we're probably looking at 41.60. But anyway, if we get a strong close tonight, then that bodes well for the stock market to actually make a breakout of this entire resistance zone. If we can get a strong upwards close tonight. However, if we don't, and that nervousness in the stock market then starts to present itself again, then and we start to come down, sell off. So we'll take these lows here from last week as being, that's the last swing low, so to speak. So whereby we've had this good run since earlier in March. We've had a good run into that high in April. We've made a swing low here. We pulled back and then made a new high. So this is the last higher low, so to speak. So if we take that low out, which could happen on the day if it was a big enough sell-off. But if not today, we've got enough data to follow up today's FOMC. So we've got ECB tomorrow and non-farm payrolls Friday. Then if we breach those lows, then look for the S&P to work its way for that trend line. So it's actually quite a straightforward playbook at the moment from those levels. So a strong close up anywhere up near these highs, and it should be chocks away for a run higher. I'll go into that in a little bit. And if it breaks down through that last low here just from last week, then we're in for a bit more of a retracement. And where in that retracement, let's put the lines on. Now you can see that trend line quite clearly below those lows. So it's decent enough to the downside to work its way down to that trend line there. Now, so just take that off again for now. You can see my horizontal line that I've got going all the way back through all of these highs as well. So if we do break out though to the upside, where next, so to speak? Yes, we've got some minor highs coming in here, but realistically, I think if we break out, then we should be looking at least to that 4,300 zone. It's a bit higher than that. August of last year, those August highs of last year, in the as far as the next leg is concerned, if we do break out to the upside. So it's a fairly straightforward playbook. Obviously, everything that goes on in the very short term is more of the noise, and of course, many traders are going to be trading that noise, on the day and trying to ascertain where it wants to go tonight. But I'm just giving some overall levels. It's quite obvious really, but I'm giving some overall levels as to where if we come down, where price may want to end up coming towards. Likewise, if we go up. If you are trading it, stay safe out there, and I'll see you at the weekend.